reports strong business growth in Q1 FY26. Advances grew ahead of expectations while deposits saw a healthy trend. Term deposit remained the key driver.
Titan skids after it posts a weak growth than its peers in the first quarter despite a low base. What's more concerning is that the growth has mostly come in from an increase in ticket size and not a rise in buyer numbers. Good evening, this is Markets Forward, the show where we aim to get you all the key data points to gear up for the next trading day. I'm Manglam Malu, with me Vinny Motiwala. It was a largely range-bound trade in today's session. In fact, it was just towards the end that we saw a spark in the Nifty, led by the Nifty Bank. It ended well over the 25,500 mark, but still well under the top end of the range in which the Nifty has been meandering for the last many weeks, between 450 and 25,600. I mean, it's been that range that,
It's such a range that, it's not much of a move that you're seeing.
Exactly, that's exactly what's taking place. 25,522 is where we closed. The broader markets, however, saw a bit of a gash on the way down. So that's what we have in terms of trade today.
Absolutely, but something happened in the last 30 minutes at least, right? Some bit of a recovery that we saw coming in. So whether you look at the broader end of the markets or the Nifty, you did see that recovery coming in. And Nifty Realty, that's the one I want to highlight as well, because that was in the red in the morning trading session. And then we saw a sharp recovery among the top sectoral gainers coming in was the Nifty Realty. More than 1% of gain over there, and banks that managed to hold on to some bit of a gain in today's trading session. But yes, that's how the market looked like. But well, here's the lineup that we have for you all in store today, and we'll start with the top movers and shakers of the day with Hormas, and then move on to individual stocks. We'll have Kotak Mahindra Bank that surged in today's trading session, obviously after the Q1 update that came in from the company. While Titan, on the flip side, saw a slip coming in the trading session due to weak Q1 updates versus its peers. Meanwhile, the pharma sector was buzzing, driven by commentaries from brokerage firms, and Hormas will also join in with us to give us the key reasons of why these stocks were buzzing in trade as well. But first up and first part of the day and the segment, I beg your pardon, is the top movers and shakers of the day coming in from the big wall from Hormas. And take it away, Hormas.
The first part of the last part of the day, that's more important to emphasize. And of course, it was the jewelry stocks led by Titan on the way down today after the business updates. And it had a rub-off effect on Senco as well, giving up some of those gains that it had yesterday. PC Jewelers recovered from the lows. At one point was down 9%, and PN Gadgil opened higher. But as Titan continued to grind lower, that too ended at the lowest point of the day. The sector of the morning, though, was textile names. And a lot of these stocks reacted to those tariffs that were imposed on Bangladesh and a potential deal with India as well. Vardhaman Textiles gave up most of those gains. Gokuldas, KPR and Trident had a fairly decent day at the office. Pharma stocks were sulking in today's session after the double downgrade that Aurobindo received and a downgrade that Dr. Reddy's received from Macquarie. Both of them ending with 2 to 3% worth of losses. Lupin, Granules, Alchem 2 ending near the lowest point of the day. Capital market names had a volatile day today, with BSE at one point was down 9%, saw a bit of a recovery, as did Angel One. MCX 361 WAM also recovered from the lows, as did CDSL, but still ending in the red. And in a market like this, the stocks that hit a new high in today's session, Naveen Fluorine was one of them. Gabrielle is making a comeback, as was SML Isuzu. And the last two names, Transrail Lighting and Sanatan Textiles, not necessarily a 52-week high, but their highest levels post-listing. Back to you guys.
Great, Hormas. Thanks a lot for that. Let's welcome our guests as well. Jay Bala of CashTheChaos.com and Sudip Bandyopadhyay, Chairman at Inditrade Capital, joining. Thanks a lot, gentlemen, for joining in. Jay, coming to you first. We've been in this range, a very boring range for the market, so to say. Today was extremely narrow for most part of the trade until the last hour where we saw that spike. Do you think that last hour spike was significant enough chartically to call it a trade, or maybe you believe that this range continues?
I think breakout is due, Manglam. The fact that we've got tea leaves showing from Reliance has broken out above important resistance at 1538, and the only resistance for the stock is about all-time high about 1606 to 1632. That is already. Reliance is an excellent barometer of the Indian markets. So if that is breaking out, it's very likely that overall market is breaking out. And the last hour wasn't that significant for me, but from a very short-term price action, if you are a swing trader, holding for about a few hours to a couple of days. I think as it is, the low of 25,300 would be a stop for the stock to go past 25,600 to about 25,800. So for a swing trader, that might be significant, but the tea leaves for the overall market is already there from the clients.
Okay, that's the view coming in there. Sudip, I'm going to come to you also. Your thoughts coming in just before the earnings season as well. What are we watching out for? We may see some of those letters coming in overnight as well for India, or whether the deal comes in. But today, textile stocks were surely chirped up. Is there anything that you're looking at ahead in terms of a play coming in, whether in terms of US-India trade deals or Q1 numbers?
US-India trade deal, it's very difficult to predict, Vinny. We have to wait for the letter to come in, because while the market has been cheering the textile stocks today based on what has been imposed on Bangladesh, Vietnam, Indonesia and others, we still don't know what's going to be our rate. So I think we are playing in the dark, and it's a little risky. So I'll wait for things to get a little more clear before taking a bet. Valuations are not cheap, but of course, if we have a favorable trade deal, definitely these textile stocks will benefit, because that's one of the largest items of export to US from India. As far as quarterly results are concerned, I think I'll be keenly watching the technology stocks. TCS in particular, which comes out with results very soon. We'll have to see what's happening to the margin, because while the BSNL contract value is coming down, the margin improvement isn't visible. So hopefully the margin improvement will be visible this quarter. They also have postponed the wage hike last quarter. Probably they will take it now, and we'll have to see what kind of impact that has on the margin. And that will be a trend setter for the overall IT industry. Apart from that, I'll be very keen to watch the cement numbers. While this is a monsoon kind of a period, so demand may not be that robust. But the fact is, overall demand in the economy has gone up, and they have significant margin improvement, which they demonstrated last quarter also. Like to see what's happening on that.
If we take that point, you're speaking about, the IT pack. The IT index actually is about 15-16% away from its 52-week high, as against the Nifty, which is less than 3% away right now. Will be very interesting to see how that goes, because the market runs on three legs. Bala spoke about Reliance, we have IT, and the third one is banks. Banks actually today were supported by Kotak Mahindra Bank, which was the top gainer and top contributor as well, on the back of strong business growth numbers coming in the first quarter. Gaurav Jabalkar joins in with the details on that one. Gaurav, on the one hand, these are good numbers, and on the second, Kotak Mahindra actually reported a pre-quarterly update after so long.
Well, yes, two surprises as you suggested. First is that Kotak Mahindra actually reported their pre-quarterly numbers, and second is that when it comes to numbers also, they have reported very strong set of numbers. So advances grew almost by 14% on a year-on-year basis, which also translates into more than 4% growth on a sequential basis, which is actually higher than the industry growth as well as the consensus estimate that were there for Kotak Mahindra Bank. Other surprise was in terms of deposit. There also we saw a strong set of numbers. Around 14.5% of growth is what we saw on a year-on-year basis. Although this number looks a little softer on a sequential basis, but let's not forget Q1 is usually softer for banks in terms of deposit growth on a sequential basis. Now this was also led by term deposits, and CASA was something which was a little softer on a year-on-year basis as well. But this is again not a concern, because this is actually industry trend where we are seeing CASA ratios coming down across the sector. Now what remains as a key thing to highlight is that Kotak Mahindra Bank was actually one of the main banks in the large sector banks who actually reported good set of numbers with the growth more than 12 to 13%, what we have seen on an average for the bank's update so far. We will be watching out on what segments actually led this growth in terms of loan book, because this will drive NIMs. But as of now, for good set of numbers, bank has got appreciation from the market. It ended with more than 3% gains today.
0.5% on Kotak Mahindra Bank among the top Nifty gainers today. Let's switch to the top Nifty loser today. That was Titan, fell over 5% at the low end of today's trading range, ended about 6% lower despite 18% growth. Why is that? Because of two important reasons. One, the growth was lower than its peers. So, yesterday we had Kalyan Jewellers reported 31% growth. Senco as well reported a 28% growth, retail growth of 24%. In light of that, Titan looks a lot lesser in terms of quantum of growth. The second part of that is a couple of weeks ago, brokerages had estimated that this time around it was a good performance, and maybe the revenues for jewelry business would grow in excess of 20%. So there was disappointment on street expectations and versus peers as well. Bit of that disappointment can be explained with the shift in Gudi Padwa in the previous quarter as against this quarter, and the last year it was in the first quarter itself, so there was that base effect, and Titan obviously has a higher exposure to Maharashtra than say someone like Kalyan Jewellers or Senco, but nevertheless studded ratio being lower, gold price volatility affecting consumer sentiment, and being zero buyer growth is what the company said was absolutely flat year on year, has had the street worried. The studded share was lower largely because gold prices were volatile, and at this time people look for plain gold jewelry more than diamond jewelry or studded jewelry, and as a result of which studded share was lower, and that may impact their margins in the first quarter numbers as well. The other parts of the business not particularly bad. 23% growth in watches, fairly good. Emerging businesses growing at 38%, led by fragrances and women's handbags, which grew over 60%. That was positive as well. CaratLane also showed a 38% overall growth, which was an improving trend versus what it had seen in the last few quarters. So all said and done, weakness versus peers and weakness versus expectations is what took the Titan stock lower by 6%.
Absolutely. Mangalam, also does the factor of, being Titan, being a bigger player versus Senco and Kalyan, that also comes into play in terms of the growth as well.
In terms of valuation multiple, definitely it does, because, it is the bigger player and it is supposed to post industry leading growth. On its base, it definitely has posted industry leading growth on an absolute basis, because Titan's 18% is worth, the entire business of a lot of the other listed jewelry companies itself. But it also is trading at a big valuation premium to all the others, though Kalyan's valuation multiple has increased over the last few quarters and it's narrowed versus Titan. But Kalyan also in the earlier part of the year saw a big cash on the stock price, so the valuation discount has somewhat normalized. So we'll keep an eye out on how this industry pans out going forward, and over the last few quarters the outperformance of Titan has come off versus the other players as well. So I guess Jay would be a good person to ask a chartical question to Titan. We're discussing how the jewelry industry is shaping up, but from just a price pattern point of view, what is your thought on Titan, Jay?
Yeah, Titan had a breakdown in beginning of this year, in early February, March 2025, and the price objective was for the stock to fall to about 2,600. It didn't go there, and then it started bouncing from the April lows. The bounce from there is also not a convincing move to say that it's going to record highs. It's more of a middling price action. But it's more obvious when it comes to Kalyan Jewellers. It looks like the high of all-time high that it registered could be there for a while to stay, and we are possibly not seeing a final low for 2025. So Titan is a bigger player, as you rightly pointed out, and I would say it can stay neutral and not get too bullish on the jewelry sector yet. So avoid for the moment. Even my assessment of the gold price action is that possibly it's already clocked a significant top, and possibly gold is set to correct to somewhere about 2,700 without a marginal fresh high about 3,500. Maybe the high is already in. But if the London fixing for gold is to drop below 32.45, I would come to a very strong conclusion that a significant high has been made for gold.
Okay, that's a view coming in there for the jewelry sector right now on the technical front. But let's just focus on talk about the pharma sector, because that was also in focus today. A couple of brokerage notes that have come in from global firms like HSBC as well as Macquarie on some of these pharma names, and the pharma index fell over 1% in trade. Now, Ekta is joining in with us to give us more details on this one. Ekta, what are the brokerages saying and which stocks are in focus?
Well, I'll start with HSBC on Divi's Labs. They've upgraded the stock to a buy with a target price of around 7,900 odd rupees. The long-term growth is going to be driven by factors such as tirzepatide as well as other peptides and contrast media segment. They see revenue potential of around $450 million from peptides and $260 million from contrast media by 2030. They forecast an FY25 to 28 estimated EPS CAGR of 23%. Macquarie has written on the entire pharma space. They've revisited the export-focused pharma space. US generics market is under pressure. Price erosion is expected to accelerate due to fewer drug shortages. Revlimid generic is nearing the end of exclusivity, and early than expected price erosion is likely to possibly impact Q1 FY26 results for key players. They're looking at lower PE multiples for US-focused generic companies amid changing dynamics. Aurobindo downgraded to underperform. Dr. Reddy's downgraded to neutral. Cipla, Zydus, Lupin, they've maintained their outperform ratings but cut the target prices. Sun Pharma, they've reiterated an outperform with the target price of 2,135. Minimal US generics exposure, benefits outlook according to them.
All right, Sudip, you were looking forward to the IT space. Is there anything particular that you're looking forward to in the pharmaceutical space as well this time around?
Well, pharma, we'll have to see, what kind of, business volume they clock out of US. I think we are clear that there is a problem as far as, pricing pressure as far as generics are concerned. So we'll have to see what position these guys are in. The domestic pharma space also needs to be seen. The growth is definitely there, and companies servicing the domestic pharma market are kind of assured of steady growth. So I think we need to look at the numbers there as well. Overall, I think I'll be very keen to see what kind of numbers Sun Pharma comes up with, because they have very limited exposure. They have significant exposure in domestic market, limited exposure as far as US generics is concerned. So I expect good set of numbers and valuation bump up in Sun Pharma.
Okay, that's a view coming in on the pharma pack. But let's move on. And the market regulator is also considering measures to limit retail participation in futures and options market. Now, sources tell CNBC TV18 that SEBI may actually consider a proposal that links option leverage to cash positions. Now, no decision has been finalized yet, but Yash is joining with us to give us more details on this one. Yash, what will this mean? What is this indication that we're picking up right now?
Well, certainly, as you rightly pointed out, no decision has been finalized yet. Of course, at this point, the proposal is far away from a decision-making stage. But what we've been given to understand from our sources is that there is a view amongst SEBI officials that there should be certain amount of linkage when it comes to options market leverage to cash market position. Now, what does this mean? Essentially, it means that if you have certain amount of position when it comes to the cash market, equivalent to that, as per a formula which will be derived, you will be allowed to take position when it comes to the options market. Linking of options market leverage to cash market position, according to our sources, the view that SEBI has would cut down on excessive speculation. Also, options position could be linked to the equivalent cash market position through a derived formula, as we mentioned. Now, there are 4 important points which SEBI plans to achieve through this proposal, which is at a discussion stage right now. The first one is with respect to increased cash market liquidity. Second one, reducing options liquidity. Third one, reducing excessive speculation and protecting retail investors. Fourth one, cut down on the ability of institutions like Jane Street to make fast money through manipulation. As I mentioned at the beginning also, this is currently at a very early stage. Possible that it may be discussed with the SEBI board before any action or any movement happens on this particular proposal. But there are a couple of other steps also which SEBI is discussing. One is allowing shorting in the cash market, also enhancing SLBM or taking loan against shares mechanism which currently exists.
All right, Yash, thank you for that. As a result of which we did see a big correction on a lot of these capital market players. If option volumes do dry up, then it will be a problem for not only the exchanges, but a lot of these capital market participants and brokers as well. That was the view that the street took. But as Yash said, it is very preliminary in discussions. With that, we'll take a short break. In fact, thank both Jay as well as Sudip for joining in and telling us about their views on the markets and a lot of individual stocks. On the other side, we get you all the corporate voices and the key market events to watch out for. Stay with us.
Welcome back to Market Forward on CNBC TV 18. Now let's move on and talk about some of the corporate voices that we had on the channel. Now, PNGRB is set to release its final order on unified gas pipeline tariff. Now, the proposed unified tariff structure would replace zonal pricing with a single rate across the pipeline network. My colleague Sapna got in touch with PNGRB member A.K. Tiwari to learn more on this. Take a look at what he had to say.
We are going to have one tariff for CNG customers as well as PNG domestic customers. Slowly we are going to move for one tariff pan-India basis. The tariff which is around 110-120 rupees per MMBTU on the transportation tariffs is going to be drastically reduced. Pipeline operators are there, GAIL and Pipeline Infrastructure, PIL. So their tariff order, we have already concluded the PCD, public consultation, we have already concluded. So that is also on the card. So together we will bring the tariff order of these. Whatever
it'll be synchronized.
Yeah, we want to synchronize because again and again doing the tariff order and then is not.
Okay. So when can we expect the order for GAIL as well? Would it be like a month, 2 months? Or could it be earlier,
think,
next month maybe?
Maximum 2 months.
All right, GAIL tariff order in the next 1 or 2 months. That will be something that the street will most definitely keep an eye out on. But let's get you some corporate voices of the day. We had the management of Parlay Products join in today. They said the firm was seeing good demand, both rural and urban demand was seeing some revival. Rural, remember, accounts for 55% of their sales. They said that there was prolonged weakness in urban and that's recovering. They expect FY26 to be a good year with category growth pegged anywhere between 12 to 13%. They've gained market share in the last 1 year, so they expect to gain this year as well, which implies that they would grow upwards of 13%.
Next up, we have Astra Microwave. The management tells us that it maintains a revenue target of 1,200 crore rupees for FY26. The firm is expecting order wins worth around 1,800 to 2,000 crore rupees from QRSM projects, and the radar upgradation is projected to contribute 300 to 400 crore rupees to its revenue annually. Additionally, the company is eyeing significant growth opportunities, in upgradation of the Su-30 aircraft as well.
All right, with that, we're out of time on this edition of Markets Forward. But before we wrap, as always, let's get you some key market events to watch out for. Gaurav standing by with all that you need to know for trade tomorrow. Gaurav.
Well, let's talk about US market. Three crucial things is what we are going to get from US market. First is that US oil inventories, crude oil inventories, which will actually decide the crude oil prices. US 10-year treasury yield auction is also going to happen, which will decide the treasury yield trajectory going forward, and FOMC meets minutes. Now, this is also something which is crucial from the US markets. Other than that, from the Indian markets, AMFI data is what we are getting in the coming days, specifically tomorrow. From the China, we will also get CPI and PPI data. That is also crucial. Other than that, there are some stock specific action which will be there tomorrow. First, let's talk about Titagarh Rail. Now, board meeting is going to happen to consider fundraising. This will include issue of securities, which also includes QIP and rights issues. Other than that, there are some stocks which will be trading ex-dividend date. So, we have Sundaram Finance, SJS Enterprise, Emphasis, SMLC Isuzu, Pfizer and Johnson Control, Hitachi Air. And lastly, let's also focus on new listing, Kryzac. Now, this IPO will get listed and this company is definitely going to be in focus tomorrow.
All right, take that point. Gaurav, thank you so much for joining in, giving us all those details. With that, we wrap up on this edition of Markets Forward. Thank you for watching. We'll be back with more news and updates on the other side.